Good morning, everybody. It's Chris from Serene Education with the 4 Majors and Notes update for the 23rd of October 2013. Morning, guys. Okay, so a few of you made money yesterday. You must have made something yesterday afternoon from payroll. If you choose to not trade like I do, rather stand aside and wait for defined confirmation from the market, I think we did get it after yesterday's non-farm payroll results, which came out negative for the US market, which then saw all the cross pairs against the US dollar rally quite aggressively. And so if you look at the euro against US dollar to start with, here on the daily you can quite clearly see they've had a nice bullish engulfing candle after a number of days of consolidation, and that consolidation coming at the prior high that we saw back here in January of this year. So we're trading above the highest high for this 2013, this year in fact. Okay, so moving higher, and my fib 61.8 level is not too far away from where we are right now. So moving higher, my long-term sentiment over here on the indicator box is very much telling me I should be looking for upside. So I'm looking to see further confirmation, and yesterday that massive drive to the upside is giving me that nice break to the upside. So looking for further indication of possible targets. I have the 61.8 above me as my first potential target. If I just zoom in, I can just see how far we are right now in terms of profit. There's roughly 57 pips and change to that level, so there is still some movement to the upside because of that. However, you can see on the Asian session we've had a lot of consolidation. We have a number of the indicators pretty much telling there's red, and you can see that the Asian session last night, a very small indecisive doji, almost a spinning top. So we've gone into our 4-hour time frame. On the 4-hour we still get a nice juicy buy indicator, but you can notice that the 4-hour candles are indecisive, so there's no buying opportunity until we actually get a close above the current daily high, yesterday's high in fact. So what we can do is to draw a horizontal line above that level, wait for the 4-hour candle to close higher than that, then look to see the 1-hour candle closing higher than the 4-hour, and then look to enter and target the 61.8 as our first initial target. Because if you go back to our weekly and just zoom out, you can quite clearly see that we're now trading above the January highs, as I mentioned. So all we need to do now is to wait for this week to close higher, get above the 61.8, and then you can quite clearly see that for the foreseeable future we've got another 372 pips to the next level, which is the swing low that we initially saw back in September of 2011. So there's more than enough movement, profits, targets to that level. We just got to wait patiently for the area to be breached, and then we can look for potential targets to enter long going into the new week next week. So back down to my 4-hour, we get a nice, the daily, we get a nice enter candle, but if we go down to the 4-hour, we also get another buy signal. However, you can see quite clearly there's a pullback. We can't buy just because of the pullback. Wait for confirmed break, enter, and then look to target the upside here at 61.8 near term. Everything's looking positive for this particular pair. So you're looking for buying opportunities. The overall trend is still looking higher. We are seeing consolidation on the Asian session. It's primarily as people take a bit of profit from yesterday. What you can do if you want to look for potential entry levels or pullbacks is to go down to your hourly, take your fib from the current support and resistance breakout that we saw yesterday, consolidation, take it to the current high. Make sure the 23.6 stays below price as support. So use that level, 23.6 on an intraday as a support level, which happens to be 20 period moving average. Use it as support. So as long as price maintains above that 23.6, look to see a nice bullish engulfing candle on that time frame, and then a nice break above the current daily high here would definitely confirm further swing highs. Nice entry level, stop below the 23.6, and then target that all important 61.8 near term, which is almost a 1-to-1 ratio here if you look at it in terms of potential targets. Moving on to sterling, here again on the daily. Notice this is my weekly fib level here, the red line, 23.6 fib. You can see quite clearly we are trading at current highs, or the 23.6. We've been here before. Back in November 2012, December 2012, we had a nice exhaustion candle here, shooting star exhaustion, and price fell. We did see breakouts on the pullbacks. We did not see any support being forged. No bullish engulfing, hammers, etc. on the pullback. We had bearish engulfing on both occasions, and price looked short. Here again, just recently, let me just zoom in so you guys can see it. Breakout, no confidence on that particular one. We want to see a nice bullish engulfing candle. We had these little spinning tops, very small trading ranges. And subsequently, the next candle that came out, which we were looking for a hammer or bullish engulfing, came out bearish engulfing the 3 prior days of consolidation in and around that area, and subsequently price pulled back. Yet again, you can see what's happening right now. The daily, we saw rallying higher last night. However, on the Asian session last night, a lot of negativity and prices back below that level again, guys. So non-farm payroll yesterday was fantastic. Took us slightly higher. However, we are back below again. You can see that my long-term sentiment is very much still favoring upside. However, intraday, we're seeing selling and the R-squared is complementing that selling. So Asian session, go down to my 4-hour time frame. You'll notice very aggressive pullbacks. Okay, what we want to see is we had pullbacks over here. However, prices failed to actually stay above those levels. Now, on the 4-hour here, for example, I can just go here quickly, drag my EA time frame on there. There we go. So I got another, I got another just over an hour and 40 minutes to go before this 4-hour candle closes. Ideally, price has to maintain above the current support and resistance level in the shape of the 22.6 here. It's imperative that price maintains above that for me to look for potential entries long. If we don't, more likely to see more sharper pullbacks. We've seen that every single time price has moved into this range. If you look at the weekly chart, there's a lot of resistance above price at the moment. It's imperative that this week maintains a positive altitude, and that's got to maintain above the 22.6. The more she fails to stay above 22.6 here, the more likely is we're going to see a sharper drop. And what we could see is price reverting back towards the institution near term. So it's important that price maintains above the 22.6 for at least this week to tell us long term we're looking at a genuine breakout, pullback, and continuation, because we've had a number of breakouts and we've had a number of pullbacks, but we've not had a lot of continuation candles with sentiment. They've always been bearish engulfing, and prices reverted to the downside. US dollar Swiss franc here again, lower lows, okay, indicating negative sentiment to the downside. You can quite clearly see prices been breaking, trading below the, most importantly, the 50 period monthly fib, the institution, the weekly fib, and now we're going to target the lower lows, which is the weekly, and then back towards the monthly. And you can see price swings here after the breakouts, pullbacks, and continuations. And near term over here, for example, we saw price trading into a consolidation. This one over here, this near term consolidation. We had a bearish engulfing candle yesterday after the non-farm payroll news, and now on the Asian session, price is pretty much flat. My long-term sentiment is very much telling me I should be looking for selling. However, I've got a lot of buying intraday, and that's consolidation, as the Asian session has pretty much gone nowhere. Very consolidative. On my 4-hour, I get a juicy sell signal because everything's selling as red and the R-squared is complementing that selling. However, you can quite clearly see that the 4-hour candles are very indecisive. So if I'm getting a genuine 4-hour candle sell, I need to see a genuine bullish or bearish engulfing candle. So what I can do is wait for a nice 4-hour candle to close lower than the prior low, yesterday's low, and look to enter my hourly chart and look for any potential targets. So I've got my 38.2 down here, which would be my first initial target. So from the support level here to that weekly fib, I'm looking at a nice healthy 84 pips. So I've just got to wait patiently for a breakout of that. You can be quite aggressive, use of an hourly close below that, look for the 30-minute to close lower than the hourly, and then enter and then stop above the hourly swing. Entirely your choice, but we do need to see positiveness. We do need to see price getting below the current consolidation, i.e. yesterday's consolidation, for any potential trades lower. Last pair of the day, US dollar Japanese yen. Here you can quite clearly see that we've seen a bit of bearishness yesterday in particular, and you can see that the candle on the Asian session last night, a lot of selling, and we're back now at the institution moving average. Price has actually found support. Nice morning star here on the institution not too long ago, which happened to be in and around the weekly 23.6 fib level, and we've subsequently seen a bounce higher. This particular pair, we've actually been in a squeeze pattern, a wedge, for some time. There we go, we're a nice juicy wedge, and then we had a breakout, the pullback, and now we have a continuation back into this. It's imperative, if this is to be negative, as it's quite clearly showing how the candlesticks are still very much red. However, it's still trading above the 22.6, which is our our weekly fib, and it's also trading above the institution. As long as it maintains above the institution, it's still one of positiveness. You can see on the daily and the weekly, we're still trading above the institution moving average. So you can see every other time frame price is trading below it. It's important we break this consolidation. We've had a number of occasions where we broke. We've had the pullback, but the continuation candles have always moved back above the 22.6. There's the breakouts, the pullback, and then the continuation candle moved back above the 20.6. So now, if you're looking for any particular trades lower, we need to see a nice confirmed break lower, the pullback, and then a continuation lower. Nice bearish engulfing candle, continuation lower. If we don't see that, then it's more likely for price to bounce back up again above the 23.6. Then we're just going to have a lot of fake outs. These are fake outs. Okay, so here, my stance on the US dollar Japanese yen, I'm waiting for a clear break lower than the 23.6 for me to even look short, because the institution is still below price. I need to see price trading below the institution long term, which will tell me it's still very much negative. And then subsequently what I can do is then start to target my long-term target, which will be my monthly fib, which happens to be my prior support and resistance level. And that is a healthy 289 pips away. Take away the breakout, the pullback, you're still looking at a healthy 200 pips at least for that particular pair. Okay, so you got to be patient, because what can happen here as you go into the institution is you could see another bounce, and then price is going to test the price swing low, which is in this area here at the 98.57 and change, back within this wedge shape formation. Okay, so that's a guys short and sweet today. Please, if you are using this particular template, to back it up with sound money management. Very, very important. You've got to trade with sound money management rules. It's so important. If you are interested in this particular template or any of the Serene Education indicators, please email us at info@sereneeducation.com. The email will be at the end of this webinar or this video. Get a hold of us, and then we can actually have a chat and see what we can do for you in terms of getting you educated with this particular template. Other than that, I'm going to leave you with it. Please look to see if there's any news out today that's going to factor in price action. Being a Thursday, non-farm payroll was yesterday. See if we can see any continuations after the negative US dollar news yesterday. If not, you're looking for trades, look for those breakouts. It's more important breakouts, pullbacks. Get those confirmation candles and look to target lower lows or higher lows or higher highs. Okay, follow the rules, guys. Keep it as simple as possible. I'm going to leave you with that. Have a fantastic trading day, and I'll catch you first thing tomorrow morning. Until then, you guys trade serenely.